Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Madhusudan Kela, founder of MK Ventures, joining in. Welcome to the show, Madhu, and always a pleasure to speak to you and great insights from you. Uh, Madhu, what we've seen during COVID, there was huge amount of euphoria, at least during March, April 2020. And from then, the kind of recovery that markets have seen, it's unprecedented, in fact, extraordinary as well. How would you describe this entire period?
So I would say, first of all, thank you so much, Hiral, for having me. Always a pleasure talking to you. Uh, I would say that, that opportunity which came in March, April was like, in a way, once in a lifetime opportunity from an investor perspective. Because at that point of time, no one was sure how long this COVID is going to stay, what will be the repercussion, what will be human loss, what will be economic loss. So obviously in that kind of uncertain period, anyone could have said, okay, this is going to last for 5 years, 3 years, 10 years, 7 years, we don't know. So market actually somewhat discounted that kind of a fear at that point of time, which is why stock prices become absolutely abnormal at an abnormal level, which was very, very attractive. And as we spend more time with COVID, one realized that yes, it's a bad disease, but the fatality rate is low. Even at the peak of the pandemic, the fatality rate is like 1.5%, 2%. And lots of people who are getting it are getting cured. And, within when then there was a talk of the vaccine and various kinds of medicines which happened. So I would say this period, when we actually got into this period, things were very uncertain. So the prices were artificially created to discount that uncertainty, I would say. And subsequently, things have only looked up. And now you know what is happening.
Right. So, Madhu, overall, right now itself, if you go to see, we are again hitting record high levels in terms of markets. However, there is a little bit of haziness that we are seeing with regards to where economic growth is concerned. Why is there a disconnect between what markets are showing us versus what the Indian economy is showing us, according to you?
So, you've been in the market for long. So have I been. Markets will always be ahead. So what the markets are telling us today, maybe the economy will tell us after 2 years, or after 1.5 years. So with the kind of money which is being pumped in globally, now I'm not only talking about India, and the liquidity which is there, and the kind of effort the government will have to do to actually lift this economy. That is what market seems to be confident, and that is what we are discounting. So let's say we have had a bad year last year. The most economists were predicting before this second wave that the economy will grow maybe at between 10 to 12% this year. That's a huge growth, right? Uh, and that is what maybe markets were discounting last year. That this year, and again, even though there might be a delay of a quarter or so, we would have lost this quarter. But I'm still pretty optimistic that economic growth over the next 12, 18 months will be quite good. And that is what market seems to be discounting right now.
Right. So if markets, Madhu, are discounting this, in the last RBI policy as well, they have clearly come out and said that they're warning of a stock market bubble. Now, clearly in its FY21 annual report as well, they suggested that the price boom that we are seeing in some stocks is more than their fundamental value. Do you think this kind of a statement coming in from the central bank should be worrisome for investors?
Real markets are clearly not as compelling as they were 1 year back. It's like, you want to go and watch a movie. आपने ticket तो ले लिया, but if you go after 2 hours, you can only watch a 1 hour movie. Na? So you can't say that I'll be able to watch an entire 3 hour movie if you are late. So similarly, people who got in very early, they made a lot of money and they're sitting with a lot of profit. But people who are coming here now, who came 2 months back, Obviously, they have to recognize that the risk is there in the market. But three factors. One, while we have to take notice of the prediction which the regulator is making, because they are also in the know of what is happening. So I would not completely discount it. But having said this, markets are markets with the kind of interest rates which we have. And one other thing, that this is not an India thing; it is a global thing.
Global.
That it is not like only in India these valuations are there, or it is not that it is only euphoria. In fact, the euphoria which is there in the US market, I don't think Indian markets are anywhere near that. Anywhere near that. Their companies are trading at 30, 40 times sales. Hardly I cannot find too many companies here in the listed space who are trading at that kind of valuation. So this is a global thing, and whenever there will be a correction, it will not be only India thing, it will be led by worldwide. Third, I would say the most important point is that in all this COVID, obviously my sympathies for the people who lost their near and dear ones, and there be unimaginable human loss. But look at the corporate India performance, Hiral. Look at the top 5 steel companies. They are 3 lakh crore rupees of debt in 2019. They are left with 1.5 lakh crore rupees of debt now. That's 60,000 crore rupees of EBITDA. They will have 1.5 lakh crore EBITDA this year. So from 5:1 debt equity, you have come down to 1:1 debt equity. Similar trend is there in cement industry. Similarly, there in chemical. Similarly, then now in fertilizer, agrochemical, specialty chemical. Now beginning in textile. So obviously, corporate India has raised money. They have done a lot of deleveraging, and the balance sheets have become much more leaner and cleaner in the last 2 years. Amongst all this pandemic, also, I must also say, I think a lot of organized to unorganized to organized has also happened, and so small people must definitely be suffering. But the companies which are listed, a lot of these companies have become much stronger.
Absolutely, and that's a well-made point as well, because I was just reading one of these reports which indicated that the net profit of listed companies as a percentage of the GDP has hit a 4-year high at around, I think, 2.6%, which was earlier around 1.8%. So what you're saying is clearly making sense.
And it is projected to go to around 6-7% in this cycle.
Absolutely. So I think it's the organized space which has become better. Unorganized, yes, there is a little bit of sufferings that they have, however you may call it. But once they start moving to the organized space as well, I think things could start looking better from them as well. But with this, Madhu, when you're talking about where globally we are seeing this kind of euphoria, in India as well, from last March, that's March 2020, the rally that we saw, there was a lot of FI money that was being pumped into the Indian system. Last couple of months, we are seeing FIs that have started to pull out. However, this time, very interestingly, there is a lot of DII support that is coming in as well. Do you think this is a very unusual trend that we are seeing and it could continue?
No. In my career of last 20 years, I have always seen these two parts balancing themselves. So if you see last year when the FIs were putting money, there was a lot of selling from DIIs. And now when the FIs are selling, the DIIs are buying. So I don't think that it is anything abnormal. So see, unless and until we see like massive dislocation of money, like $5 billion, $10 billion being withdrawn in matter of 2 or 3 months, then obviously markets will have an impact. But till now, we have not seen that.
Right. So with this, if someone, Madhu, is looking to invest right now or has started investing in the last couple of months, do you think they should wait or, probably wait for corrections to enter? Or is this the time to start, at least bottom picking?
Hiral, at the cost of repeating, one has to be cognizant that right now there is a risk in the market. And the markets are not as attractive in terms of risk reward as they were, let's say, 12 months back or 18 months back. So having said this, what are your alternatives? If you do not invest in equity, where will you invest? You are still in a fixed income, you are getting like 4% pre-tax. Then if you are a 42% taxpayer, your post-tax yield is 2%. And similar situation is in property. I don't know where property prices are actually rising. Gold has again been more or less stable. Gold has not given any return. So I think this lack of alternative avenues is, whether you and I like it or not, or whether you and I advise or not, people will come to equity. So what I am saying is that you come with your eyes and ears open, that yes, markets have had a fabulous run. And there is risk of a correction. When it will happen, how much it will happen, we don't know, right? But if you are a long-term investor, if you want to do that allocation in equities, I would say a lot of times are good times, including this time. But let us not look at the index. Look at below the index. Are there still investable companies? Are there still investable sectors? Are there still opportunities which are there on a risk-reward basis? I can clearly myself see a lot of opportunity, and we keep investing every day, right? So I think on a risk-reward basis, there are still a lot of companies where there is decent money to be made.
Right. So how would you describe the valuations right now in terms of India as compared to other developing economies?
So if India is, I would say, more or less in line with what is happening across the globe. As I said, there are other developed economies which are far more expensive than India. And as compared with few developing economies, we might be shade higher or lower. But I don't think there is any particular reason or cause of concern vis-a-vis Indian valuation only when we look at the global context.
Okay. And right now, if you have to look at India, I mean, we spoke about how the earnings have panned out. Clearly, the earnings growth is spectacular despite COVID hitting us. From here on, are you expecting this kind of growth to continue, or do you think this could be pent-up demand?
No, I don't think it is pent-up demand. I think this will continue for a while. And if you have 10-12% GDP growth rate, there is no reason to believe that select sectors and select pockets of economy will not do well. And also, let's not forget, I think government will have to absolutely do the heavy lifting. As soon as this pandemic is over, I think the kind of investments which you will see from the government side, whether it is in infrastructure or opening up the supply side of the economy or doing disinvestment, this will all argue well for the profitability of corporate India.
Okay. And then with this, the kind of liquidity that we are expected to see, Madhu, do you think that's enough right now for India, or something more, we have more room, or the government has more room to provide more liquidity?
I think markets are, system is adequately liquid right now. You see, in spite of 2 consecutive months of inflation rise in India, we are still seeing plenty of money in the system, and good people are able to borrow at reasonable amount of interest rate. So I wouldn't say that liquidity per se is any concern right now.
Okay. And with this, do you think there is a need for a fiscal stimulus to take care of the consumer sentiment? Because the RBI is doing enough with regards to where a monetary stimulus is concerned.
I think there is a need to support the economy for sure. There is need to support specifically the MSME and SME sectors who have been hit hard and who do not have much revenue. And I'm sure, like what the government did, the guarantee for 3 lakh crore rupees for SME and SME, that was the right move. I'm quite pretty confident that that might get enlarged, or it may get extended in weeks and months to come, once the government gets a clear picture. And I think this time around, to give full credit to RBI as well as to government, they have taken, unlike what happened in UK, I'll tell you, where they distributed cash money and they've created large deficits and large borrowing. I think our government out here has been very, very sensible. So they have firstly assessed what needs to be done, and they've done the adequate measures and I have no reason to believe that the fiscal stimulus will not come, and it is needed. It is only a matter of time that it will come.
Right. So overall, with all of this, where do you see value emerging, Madhu, right now, taking into consideration the risk reward as well? Which are the sectors that you think will be growth oriented?
So, Hiral, please put all possible disclaimers. This is not an advice. Anyone who is watching, they must consult their advisor. So I see value in value only. So the value stocks have been neglected quite a lot for last 10 years. If you see the market run from 2014 to 2020, it is only companies with different sectors, like whether it was consumer discretionary or FMCG sector, or high PE multiple companies, or technology, pharmaceutical. These are the companies, sectors which did actually very, very well. And wherever there is absolute value, those are the sectors which got neglected. But if you see the leadership of last 1 year, actually value sectors have taken the lead. So whether it is the metal companies which were neglected for 10 years, they have been in the limelight, or now you're beginning to see infrastructure, real estate, textile companies, a lot of these companies, power companies, they have started to participate. So I would say that, and this is why, Hiral, I very proudly say that we are flexible investors. We are not married to a particular style, or we are not married to a particular type of investing. So maybe once the value theme will come back, if you look at the portfolios of a lot of people, still it is not adequately represented. And I'm sure as the economy gets into a cyclical uptrend, a lot of these underappreciated sectors of the past will come back. And this time around, the market cap will get concentrated in fewer hands. So like when we had the rally last time in the infrastructure sector between 2003 and 2008, there were maybe 100 companies to participate. I don't think this time the market cap will be more than 10 companies or 12 companies. Majority of the market cap gain will be to these 10, 12 companies, and it will get consolidated like that. So I would say cyclical upturn, wherever you are convinced that the sectors which will benefit and where there is deep value. Needless to mention, I've been very vocal that I love the public sector enterprises, because I am convinced that the disinvestment is inevitable. Government finances are very stretched, and whenever, as an individual, if you are in trouble, the first and the last thing you will do is to sell your assets. And this time, the government will have to do the same, because obviously they need a lot of liquidity. So I like the entire public sector theme along with the value theme.
Right. So with all of this, my one question that comes is, usually what happens is either the rally that we see is with the large caps, or once the large caps are silent, it's the mid caps and the small caps that see the uptrend. Now, the kind of return and bounce back, Madhu, that we saw in the mid caps and small caps, do you think now this is going to be a time where we will see a phase of consolidation, correction on these names? And it's going to be the bigger names, bigger companies right now, which will keep taking markets higher.
So this question, I will agree with you, Hiral. I think, we have had a fantastic rally in a small cap and mid cap, by and large, I would say. That there will still be pockets of opportunity in small and mid cap, and I am now generally a fan of mid cap stocks. But I would say this time, for the people who are coming new, large caps relatively are cheaper. On a risk reward basis, they are offering better opportunities than a lot of the mid caps. So when you are investing in the mid cap, you have to be generally be very careful that you are not just simply buying stories, and you are not stretching it to 2025 and 26 and 27, because that way you can justify any valuation. So in a near term, it is entirely possible that we may have some consolidation, some correction in a small and mid cap, and money may move into some large cap. And also, I think if you look at the regulator stand also, there are so many stocks which have been moved to ASM. There are so many stocks which are now attracting 100% margin. That list also got released last week. So this will again put some kind of a dampener to the retail participation, which was very rampant in the last 6-9 months.
Right. So very lastly, Madhu, what would your target be for Nifty and Sensex? Because everyone is saying 16,000 on the Nifty is not very far. With regards to Sensex, People have started talking about a lakh and probably a 2 lakh as well. What would your verdict be?
No, I don't want to predict, Hiral. I don't think I'm competent to predict where the index is going to be, and neither do I apply my mind. See, we are basically bottom-up investors. As I told you, we can still see a lot of value.
Correct.
Obviously, markets have risen quite a lot. There have been absolute handsome returns in last 1.5 years. So one has to be prepared for some period of consolidation, little bit of correction. If you're coming in now, if you're putting fresh money, your preparedness for investing into individual companies have also to be very, very sharp. But having said all of this, I would still say there is still plenty of money to be made for a medium to long-term investors. If you know how to analyze companies and if you have the patience, then among all these asset classes, whether it is fixed income, real estate, gold, diamond, any other asset class, I think equities still will offer decent superior returns.
Absolutely. Thank you, Madhu, so much for joining us on the show. Always a pleasure to speak to you. Great insights. Stay safe and speak to you soon again.
Yeah, thank you so much. Thank you. Thank you so much.